All right, so this is going to be the breakdown of the trade that we took on gold for over $4,000, the one that we called in Telegram. And I'm going to show you guys the full breakdown and how I got to this overall setup. Now, you guys know, if you've been watching me for any length of time, that I prefer higher time frame bias. Every single time I'm looking to see if I can find a move on the daily or weekly. Obviously, now if I don't find that type of move, I'm typically going to look for intraday plays. But there's a reason why I said in the Telegram that I want you guys like to hold a position when we got this initial surge up, because I said there's a big potential for a big move. And why was that? So let's start off on the weekly time frame. Every single new week, I always look, is there a clear draw on liquidity? And for me, there was. So this is obviously this current week, but typically when we have the market form, this it was actually let me take a step back. On the weekly time frame, we clearly have bullish structure. We're respecting this bullish fair value gap, and the market is making new highs. The market is taking out lows and then making new highs. The market had a little bit of an inside day in here, and then the market closes above the prior bar high, right? Essentially creating this order block. So when this happens, this is essentially like we can see that the market obviously is in a bullish trend. So when we have a situation like this, we know that the prior week high is possibly going to be the next draw on liquidity, right? Because think of this type of overall structure on in terms of candlesticks, and I have a very good candlestick video coming out this weekend as well in regards to all this stuff on my main channel, which I'm going to link in the description. This structure on the on the weekly time frame is essentially just overall bullish market structure on the lower time frame, right? Higher highs, higher lows. And we know that if the market has an impulse push up from swing low to swing high, the market is going to come down into some sort of level of support, which on this day it did, on this weekly candle did, right? We tapped up that order block high. We're typically going to have the market make new highs. So this structure is essentially just this. So understanding that, we have a clear draw liquidity, which is the prior week high, which is going to be our higher high on the lower time frame. So that's how I started off the week, and I'm anticipating a bullish week. Now, obviously, the key is now waiting for that opportunity. So the order block on the weekly time frame was essentially this high. Look how we ran down. Now, whenever I look for the market to show me strength off a key level, right? Because it's a big thing that I always talk about. Whenever I want the market to show me strength off of a key level, I want to see a run on stops at that key level with a strong move or strong displacement move higher. In this case, what did we get here? Right, we got exactly that. The market swept the liquidity pool. This was on Tuesday. We took out Monday's low, and we had a strong displacement move up. Now, this is actually a candle formation that I've actually been like looking into as well, where essentially it's a two candle play where this candle essentially takes out the prior bar low, and then we have the next candle that closes above. It's very similar to the EBP in the sense of like when we have an EBP candle, we're essentially having a run on stops and displacement. This is the same exact thing where we take out liquidity pool, right? Took out the prior day lows, and then we have a strong push and we close above that current candle. So the candle that took out the liquidity, we have a closure above it. So this, again, the same concept, guys, is on a lower time frame. It's the market taking out liquidity and then having a break back above structure. So this type of setup is this on the lower time frame. Now, because we have the closure above here, think this is how essentially I was looking at the marketplace. The weekly high is obviously our target. That's going to be our DOL. That's going to be where we expect the market to go during the week. Now, we still obviously need a setup. So whenever you have a clear defined range from swing low to swing high, I always draw out the range, and then I start to look in terms of like, okay, around 50%. Once the market starts to dip down 25 to 50%, I'm essentially looking for some sort of buy opportunity to essentially tackle this high. Now we're going into essentially we were going into CPI. So CPI, obviously, I want to wait for the news event first, as we talked about on stream, and I want to see, is this going to give us an opportunity? Now, when I go down to the 4-hour time frame, so this is how I align everything, right? Now, if I'm trading an intraday basis, I'm going to go from 4-hour, 1 hour, 5 minute, or 15 minute, right? So like, don't get caught up on the whole idea that this is a weekly time frame, because I understand on the weekly, you're not always going to get setups. But whenever the weekly time frame does have setups, I'm typically going to be interested and focusing on that. So let me go ahead. Okay, so now on the 4-hour time frame. So now we're going to go into CPI day. So on the day of CPI, which was Wednesday, right? Let's just go. Let's see what happens. I talked about this again on stream, guys. So make sure you have notifications on for whenever I do go on stream, or make sure to just stay in the Telegram, because in the Telegram, I will notify you guys when I am going live. All right, so right here, this was on the CPI day. Okay, so right here, this candle, and I remember during the live session, I was saying this actually looked like it might be bearish, right? However, we ended up closing, and this is why it's so important. I always preach this. I always wait for 4-hour closures. Now, why do I always wait for 4-hour closures? Because while this was forming, this actually looked very bearish. But what ended up happening is that the market confirmed that 50% mark, right? So again, from that daily perspective, when we draw the fib, we pretty much came down to that 50%. We also took out like this liquidity pool, which was essentially some liquidity from the overnight session in London, and then the market pinned back inside the range. Now, this alone is not going to be like, I still want to see what happens in terms of the marketplace. So let me put this. So again, this setup right here is going to be after the 4-hour close. On the 4-hour close, we essentially inverted this bearish fair value gap. Think about it. If the market was going to sell off, we should have sold off right here and then pushed to new lows. But we didn't. We had a reaction to bearish fair value gap. The market failed to make new lows and we closed above. Now, what I want you guys to think for a second. As a trader, right? How many traders do you think end up selling like a retracement? So swing high, swing low, and again, basic market structure, right? Whenever we have like some sort of high breakdown below, a lot of people are going to look to short, so to look for the next leg lower, right? But the thing is, we've already swept all this rejection block in here, the buys of the candles. We swept the current overnight range in here, and we also are below Asia range, right? And again, the key premise, the weekly time frame, we still have this prior week high in here. So let me just remove that line. Right? We have the prior week high. This was the objective. So what happens here, think about how many traders typically will get trapped in something like this on the move down. And then what happens is if you get like an impulse push up, that's a setup right there. So let's go ahead. Let's see what actually happened on the 5-minute time frame. We have an ABP candle. So what is an ABP candle? It's essentially the candle that takes out the prior bar low and then has an impulse push up. When you have this is going, again, we'll go down to the 5-minute because this was where my entry was. Look at how we respected this bullish fair value gap after kind of disrespecting the 15-minute. And look at what happens. We have a strong 5-minute closure. So think of market structure now on the current leg. We have swing low, swing high. This is our higher low. And then we actually have a closure now above here. And that's why I said I want to look for that retest. And there's going to be a fair value gap, which adds even more strength. So we have a fair value gap that's present in there. Again, bullish market structure. So now all I'm doing is I'm just buying the dip because I'm anticipating a higher low. We have the prior week high up there. And I want to put my stop loss below the candle that broke above the prior structure. Like when you have a big, strong candle like that, I'm typically going to put my stop loss below that candle bar's low. And then I'm looking again for the prior week high. This was over 3R, but you guys saw in the thing, I held it up a little bit higher for about like 4R, 5R trade. And then we'll see how we play this forward. Got the fill there. And it's so funny because I know a lot of people sometimes when the market is like hitting that level one, because you think we got fill here, this is 4 or 5-minute candles. So in 20 minutes, a lot of people freak out. Again, you just allow the market to play out because you don't want to miss opportunities like that. When the market just goes absolutely apeshit to the upside, over 6+R at the highest point, and more than enough money to make on this type of play. So again, guys, whenever I'm looking for a bullish setup, I want you, let's recap. Whenever I'm looking for bullish plays, I always want to wait again for the 4-hour closure to confirm. I always want to see, again, some sort of run on stops, right? I always want to see bullish market structure because if I'm going to look to enter, right? Like, why didn't I enter here? Because I think this was a little bit premature because this could have easily faded off and then maybe even come down to this fair value gap, etc. Like, I didn't know, right? At this exact moment, I don't know what's going to happen, right? I'm not going to try to preemptively buy here because obviously in hindsight, it did have a reaction. I want the market to prove to me that we are in a bullish flow now, right? So when we go, I mean, the fact that we took out liquidity and then we had that 4-hour close, and then we're also creating bullish imbalances, that's step number one. Okay, but let's see if we can make new highs. We did, right? So now we have this bullish market structure on the 5-minute confirming that. And I like to look for my entries once I get a 4-hour bias. I like to look for my entries on the M15, M5 because it gives me the best risk to reward. right? And then that's where we get the entry. And all we're doing is, again, anticipating the market to hold a new high, higher low to make new highs, right? Once we took out this liquidity and then we had the prior week high, that's where you guys see me start to take out positions. So that's all I'm looking for is a strong daily or weekly bias, or even a 4-hour bias, to be honest. And then I want to see a 5-minute confirming bullish market structure or bearish, depending on my bias. In this example, I was looking for bullishness. So I want to wait for the 5 minutes to confirm bullish price action. For me, it's very simple. Liquidity sweep into a key level, right? Boom, new highs. Start to buy the dip opportunities. If there's a fair value gap, if there's a prior high, whatever, boom, right? And then just from there, that's where I put my stop loss to break even when we make new highs, and then just ride the trend. But yeah, guys, hope you guys found this insightful. If you already aren't, make sure to join my Telegram. The link will be in the description below. And I cover all the educational concepts on my main channel. So if you're interested in that, I'm also going to leave that in the description. And let me know if you guys have any questions in the comment section. And I'll see you guys in the next recap.